So, in the previous class, where did we stop? Who will tell me? What was the topic stop?
Interest on capital.
Yes, anyone, anyone.
Interest on capital.
Interest on capital, and where did we stop with? Okay, wait. Interest on capital, that's fine. What is interest on capital? What do you understand by interest on capital? Tell me in your own words, what you understand by this interest on capital. What is it? Or who pays interest on capital? Who pays it to whom?
Business pays it to the owners.
Business pays it to owners. Very right. So understand, what is this interest on capital? The owners. Here we are learning partnership. So it is a partners. So partners are investing capital in the business. So in return, as a token of thanks, the business is repaying some interest. You understand? Capital is contributed by the partners. So in return, the business is paying some interest to the partners. That is interest on capital. Fine. Now, my next question is it a mandatory payment for the business? Is it compulsory?
No, if there's only profit.
Sorry, once again, no. I heard that. Yeah, it is no.
Only
then
if there is profit in the business.
Okay, only if there is profit you will pay. If there is sufficient profit, then my question is, listen. This payment, interest on capital, is it a mandatory or compulsory payment from the side of the business? Is it the right of the partner to receive it? I should get my interest on capital.
No.
No. Why? No. Why? Anila also said no.
Partnership.
Answer no is right.
Only if it's mentioned in the partnership.
Correct. That is the point. Very good. Only if it is given in the partnership deed. Only if such a clause is there in the partnership deed. Then only we need to think about this interest on capital. Whether there is profit, what is it? What is the condition? If there is sufficient profit, if it is loss, if it is an insufficient profit. Everything regarding profit, you have to think about it only if it is mentioned in the deed. If the deed is silent or if the deed, nothing is mentioned about this in the deed, then not required. Is it clear? Why? Because why I am asking you such questions is, you will have case study questions. You will be given a paragraph. Some story will be given. Okay. So that's why I'm asking you in this way. Okay, that is done. Now, interest on capital. How about the interest on capital again? What are the two cases with this interest on capital about the payment? How could be the payments done? From where is it given? Yes? How is it treated?
From the profits.
From the profit? How is the treatment of this interest on capital? Yes? Interest on capital can be either dash or dash.
Appropriation of.
No, yeah.
Profit.
Interest on capital can be either considered as charge against profit or appropriation of profit. Are you getting the connections? Is it getting clear? Okay. So last day we were discussing about appropriation of profit. Am I right? Correct? We discussed the
Yes,
three cases. There were three cases regarding appropriation of profit. Appropriation of profit means, what is it?
they'll pay if only there is sufficient profits.
Very good. Only if there is sufficient profit after meeting all the direct expenses and indirect expenses. If you have net profit available, then only you need to make the payment of this interest on capital. So, if there is sufficient profit, then what to do?
Full amount is given. Full
Hmm.
amount on interest on
Very good. In which ratio?
The agreed ratio.
What is that agreed ratio? What is that ratio? Profit sharing ratio. If there is sufficient profit, then we will share, we'll calculation, upon the capital into rate by 100, then we will share it in the profit sharing ratio. If there is no sufficient profit, then how is it done? The profit is not sufficient. There is profit, it is not loss, there is profit.
in the ratio of their capital.
Capital ratio. It is not the profit sharing ratio. We will share the profit, the interest on capital in the capital ratio. Ratio of the capitals contributed. That is the second case. And finally, the third case, if it is loss, then what to do?
No interest on capital is given.
No interest on capital. So it is charge against profit. Only if there is profit, you can give this payment. And as per the third case, it says there is no profit. So no interest on capital is allowed. Okay. So that was the case of appropriation of profit. Now we are going to see the interest on capital as charge against profit. Charge against profit. So, charge against profit means what?
It's a compulsory payment.
It is a compulsory payment. It should be given. Even if there is profit or loss, whatever be the condition, interest on capital should be paid to the partners. So, where do you show this item? How do you give it?
It's debited in the
Debited?
in the profit and loss account.
Debited in the profit and loss account. You will show it in the debit side of P&L account. Why in the debit side of P&L account? It is charge against profit. That is okay. What kind of item is this? What was it? Interest on capital. Interest on capital. My question is it an asset, liability? What kind of account is it? Which class of account? I hope you understand my question. Keep the video on. So next topic is interest on capital considered as charge against profit. When interest on capital is treated as charge against profit, it is always provided even if it is loss. That part is clear to all. If it is charge, it is a compulsory payment. So even if it is loss, we should make the payment of. We here mean we means it is a business. Business should make the payment of interest on capital. And if that is the case, charge against profit, it will be debited to profit and loss account. Why? Interest on capital is an indirect expense. Indirect expense, note it down. In trading account, what we show? Direct expenses. Correct? Direct expenses are shown in the trading account. Profit and loss account, we show the indirect expenses. So where do we show this interest on capital? If it is charged, it is coming under profit and loss account, debit side. Interest on capital. Why? Because it is an indirect expense. That is the reason. Then, and not the profit and loss appropriation account. You know that. Only if it is the appropriation, then only we will show it in the P&L appropriation. Otherwise, it is shown in P&L account, profit and loss account. Then the next point, very important. It should not be credited to capital account. If it is charged against profit, we will not show that in the capital account. Do you understand? Capital account. You remember I showed you the happy smiley, small smiley and all for capital account. Whatever results in the addition of capital received by the partners, we will show it on credit side. And reduced the payments, we show it here in the capital account. Okay? And that time we wrote interest on capital over here as it is received. But if it is charged against profit, we will not show it in the capital account. No. Why? Because this capital account, we will pay it to the partners only at the time of dissolution. Or only at the time of retirement. You remember, capital is paid back only when the partner leaves the business. If it is charge means it is compulsory payment. So, either we will give it in cash immediately. Take interest on capital, 2,000 rupees. Directly we will make the cash payment. Or we will put it in another account, that is interest payable account. Do you understand? This charge, if IOC, interest on capital, is charge against profit, we will not show that in the capital account. Because either we can pay it in cash, direct payment is done, immediate payment is done. Or we will keep it in another account, that is interest payable account. Interest payable account is a liability. We will show it as a liability. I hope it's clear. That's it. Then, however, if the profit sharing ratio and capital ratio are the same, charging of interest on capital will not make any financial difference to the partners. If both the ratios are same, there is no much difference. Both the ratio are same. It will not make any difference. Okay. Now, here we have two cases. When the profits are sufficient, and the second case, when the profits are not sufficient or it is loss. If it is charge against profit, we are having two cases. First case is when there are profits. Profits are sufficient. profits are sufficient. That is the first case. Second case is if it is not sufficient, or loss, both together becomes the second case. Earlier we dealt this way as three separate cases. But here we have only two cases. If it is what? There is sufficient profit, okay. Both the case, we are dealing it the same way. It is charge against profit. So we will be showing it in the P&L account, debit side. There is sufficient profit, well and good. If it is loss or sufficient is, profit is not sufficient, then also we will show it in the profit and loss account, debit side. Did you get the idea? Because it is charge. It is charge against profit. And there is sufficient profit. It is sufficient. Okay, sufficient. Then what happens? We will give IOC, interest on capital. We will have net profit. We will be getting net profit. That net profit, we will again use it for appropriation, or we will share it in the profit sharing ratio, PSR, profit sharing ratio. Or now let it be insufficient. It is not sufficient, insufficient, or loss. Or it is loss. Then also it is charge against profit. So we will show it in the P&L debit side. Correct? Then what happens? It might result in net loss. Second case says that the profit is insufficient or there is loss. Still, we show it as expense. We show it in the debit side of P&L account, so that sometimes will result in the net loss. Okay, no problem. This net loss, we will share it among the partners. Is it clear? Any doubt on this interest on capital? If not clear, tell me. Can anyone explain this? I just want to make sure you got the idea. Interest on capital. Explain this charge against profit. What did I say? If it is not clear, tell me. Or mention it in the chat box. Always interest on capital is calculated on the opening balance. First, what is introduced? Whatever capital is introduced into the business, it is on that figure that we will calculate interest on capital. You know, the rate will be given and the calculation part you know. If in the question opening balance is not given, then how do we find capital? Anybody remember the formula? No problem. Write it down. IOC is always calculated on opening capital. Opening capital To find opening capital. Opening capital is equal to closing capital. Share the screen just a second. Yeah. Closing capital plus losses during the year. Losses during the year plus drawings plus interest on drawings. So three things should be added based on the question. If it is there in the question, it all depends upon the questions you get. So capital at the end of the year is equal to plus losses during the year plus drawings plus interest on drawings, finish, minus additional capital, if any, minus additional capital minus profits for the year. We'll continue in the next session. Okay, it's time 12:40.